they've just rolled out. What they've just rolled out um, this summer, and I've been doing this for about 6 years now, is Equity Builder. It's one of my favorite programs. There's the Equity Builder for first-time home buyers. So how it works is this: Equity Builder gives first-time home buyers who qualify $10,000. The $10,000 goes towards down payment, goes towards closing costs. It's a grant, so you don't have to pay it back. The grant is forgiven after 5 years. So after you've been in the home for 5 years, it's technically a lien on your property. So it'll be a second lien on the property, but after 5 years, the lien is forgiven. How the most important part is eligibility. Most of the first-time homebuyer programs, they are income-based. So what we have to do is they go by HUD income guidelines. So any possible borrower, I would have to kind of go on Google HUD income limits. Then once you log onto the HUD website, it gives you can just put in the criteria. You put the state, then you put the county, or you could even put the town you're buying in. Then what it will then show you is income limits for each household member. So let me just go on to the HUD income limits, and just to pull up how it works, because each household member counts towards the income limit. So let's say you have a mom who makes $50,000 a year. Let's say she makes $60,000 a year, but all of a sudden she's over the income limit because the median income for her town is $50,000. But guess what? She has 2 kids. Then all of a sudden the household size is 3, and the income limit changes. So it will go up to about 60,000. So because she has 2 kids and she makes 60, then all of a sudden she's able to qualify to meet the income limits. So the more household members you have in a home, the more income you could make and still qualify for the program. The reason why I like this program as opposed to CHFA FHA with the down payment assistance is, CHFA will give you the money to borrow, to put down, but those funds isn't a grant. You have to pay those back on a monthly basis. So, if they lend you the down payment 3.5%, you still have a 30-year loan that you'd have to pay back for those programs. Another reason why I prefer these grant programs over CHFA FHA is because of the PMI limits. As you know, I'm not sure if you all know, but anytime you're purchasing a home, if you're not putting 20% down, then you have to pay what is called PMI. PMI, private mortgage insurance. It's an additional payment that you make on your monthly payment, mainly because you're not putting 20% down. If you would go with a CHFA FHA option, which is a good program for first-time home buyers, it's just that the PMI that you pay is for the life of the loan. And typically the PMI premiums on those are higher than conventional. If you go with the first-time home buyer program, the PMI, you get a discount on the PMI, which will probably, make it about 70% what it would be if you went with an FHA option. But it's also, after you have 80% equity in a home, typically around 7 or 8 years, it automatically could fall off. Whereas if CHFA FHA, that PMI is for the life of the loan. So it is a very good program. And, it's just that to qualify someone, I would have to look at the income. I would have to look at the credit, make sure they fit within the income guidelines for the area they're buying in, because each area has different income guidelines that we have to meet. And once they fit into that income criteria, what I could then do is issue a pre-qualification letter. They could start hunting for a home. Once you find a home, that's when I start the application process to get you approved through FHLB for a home. That's the Equity Builder, where it's for first-time home buyers if you need the down payment assistance or so. The good thing with this, though, is they also have an option for let's say you're over the income limit. Let's say you're a household of three. The income limits is about 60,000 for a household of three. But let's say, hey, I'm a first-time home buyer, but I make $80,000 a year. Good. FHLB also has another program which is called HOW. This program is for people who are over the 80% income limit, median income limits, but are between 80 and 120% of the median income limits. So these for higher income borrowers, but it's not, it is a grant also, but it's what's called a matching grant. So they'll give you 10,000, same as Equity Builder, but to get 10,000, you would have to put 10,000 down. So let's say, hey, you make a little bit more money, but you have 10,000 that you could put towards the deal. Then all of a sudden your down payment is 20,000 instead of 10. And that also is a grant. That also is forgiven after the 5 years. It's just that they have higher income limits for those. Each program works well. Each program is good. And they're available here at Windsor Fed. We also have, separate from FHLB, we have our own. Hello? Yes. So separate from our Equity Builder programs, what we also have is Home Possible. Home Possible is another really good program through Freddie Mac for first-time home buyers. This program, it's not technically a grant program, but let's say you're in a situation where you don't meet any of the income limits. You're over the income limits, or let's say you're over the income limits, but you do not have a certain amount of funds to put down. What this does is give you the option to do 3% down. You know, FHA is it's 3.5% down, you know, lifetime PMI, but Home Possible gives you the option to put only 3% down, conventional option, and it still gives you the ability to get a discount on PMI. And we also offer a discount on rate. Another thing too, our Equity Builder offers a discount on rate too. So you will get a 0.25% off whatever the going rate is. And your only contribution to the Equity Builder is $500. So you essentially only have to put $500. I know these times are difficult, especially with contract negotiation, where home buyers aren't really receiving seller's credit to kind of compensate, to help with the closing costs. So, you know, these are really good programs that could help go a long way with not only down payment, but also help towards your closing costs. Do anyone have any questions about any of the programs that I've just talked about?
If you have a question, feel free to unmute yourself.
And again, with any of these programs,
I have a question.
Sure.
You said there's a program that you would have to get the lifetime PMI. So what that means that your mortgage would be a little bit more than if you did not apply for that type of program that offers the lifetime PMI.
Okay, so the lifetime PMI is for FHA products. The Equity Builder program products that I also offer, and the HOW program, and also the Home Possible program. Those are conventional options. So with conventional, if you go with a conventional option, the PMI falls off after you've accrued 20% equity in the property, typically around 7 to 8 years of owning the home.
Okay, thank you.
You're welcome.
Yeah, Tristan, just for clarification on that, because I think she was probably under the impression that the PMI is actually, like, you know, because I think a lot of people don't understand what the PMI is, but it's not really a good thing. So yeah, so a lot of times if we could basically find ways, like you said, around that, or, you know, get type of loans that allow the PMI to fall off once you get to certain equity, then it's
Yes.
a good thing. So that's FHA is good. It's definitely not a bad program, but with some of these options out here that give you a little bit more flexibility,
Yeah.
it helps. Along with obviously in a competitive market, a conventional offer looks a lot better.
It looks a lot better, and it's easier to get approved because FHA options are a lot more restrictive. You know, the home has to be in a certain condition. You know, it's just a little bit more restrictive, a little bit harder to get approved on the not harder per se credit wise. But let's say Fabian, let's say I have a borrower who comes in, you know, their credit scores are in the 700s, you know, and they meet the criteria for both CHFA and the grant. I wouldn't gear them or steer them towards the CHFA FHA, mainly because they have pretty good credit. So more than likely the PMI payment is going to be a lot lower than if they go with an FHA option, because the PMI on conventional options are based on your credit scores, where, you know, the PMI on FHA are based on the purchase price. So, you know, you might end up with the same purchase price, and because you have higher credit scores in the 700s, your PMI might be, you know, 70% what it would be on an FHA option. And on top of that, you know, it falls off after a certain period of time, where FHA, it is for the life of the loan. You know, but that's where it comes in, where, you know, as long as once we meet, I would have to obviously look at 2 years W-2, 1 month pay stubs. I'll do a soft pull on the credit, which won't have a negative effect on your credit, especially if you're not ready at the moment to move forward. And I could actually run all those numbers and give you a fairly good idea of what each option would be. So I could say, hey, look at this. This is where you'd be if you go with the FHA option. This is where you'd be if you go with the grant option, which in any scenario, as long as I can get you approved for the grant, it's going to be a better option, because it's money that you don't have to pay back. It's going to give you a lower PMI payment, and it's going to fall off after a certain period of time. So it would be a no-brainer as the option. But, you know, let's say I have a borrower who, hey, maybe their credit scores are in the low 6s, you know, we could probably still get them approved, but because it's a conventional option for the equity builder or the the Home Possible program, that wouldn't be the best option, because those are a little bit harder to be approved, and the PMI could be a little bit higher than even an FHA based on the lower credit scores. So the good thing is there's like 4 different options that you would have as first-time home buyers. The equity builders and the grant programs are a lot better, but if you don't meet those criteria, we still have the FHA CHFA down payment assistance to fall back on.
Justin, I have a question.
Mhm.
So this is great information, but I could see how it could be intimidating to someone who is not familiar with any of the jargon. Is
Mhm.
there any like websites that my families can use or go to see it written down so they can read it? And if so, can you just put it in the chat so that they can access it later on?
Okay, so with any one of them, it's pretty simple. With the grant programs that I have, if you just Google FHLB, Federal Home Loan Bank Boston, and just type in FHLB Equity Builder, it will give you a whole spreadsheet on it. If you just type in FHLB HOW program, HOW program, it will give you a whole spreadsheet on those programs also. And same Google Home Possible, that it will bring you Home Possible will bring you to Freddie Mac website, and Freddie Mac website right on there, it will give you all of the criteria that you have to meet to qualify for those. I do have a couple different spreadsheets that my manager put together. What I will do is I'll email some of them to Fabian after this meeting, so at least you can have each different programs, and they will give you kind of like the highlights of how they work and what the criteria are and how and so on to meet them. With any of those, though, they won't show the actual income limits, but with all of these programs, they go by the HUD income limits. So again, simply, if you just go Google HUD income limits, it will bring you to a page that you just pretty much enter your state, you enter your county, or you could even enter the specific town that you're looking to buy in, and then it will show you all the income limits up to household up to 7. So you could see, hey, if my household is 2, the median income, how much I need to make to qualify for each different program.
Thank you.
You're welcome.
Okay, so our next thing, like I said, for anybody that has questions, feel free to jump in at some point, because I know that this is a lot of information that's being brought to you just in a short period of time. But I think a lot of times when it comes to home buying, people seem to be a little bit intimidated, like Helene mentioned, because one, for some people, they may be the first in their family. Some people have done it before and might have been a while back. However, I think maybe Tristan could touch upon this a little bit more also. When, like he mentioned, he tried to do soft pulls sometimes for the people that are concerned about pulling their credits too much, because that's one thing that I hear pretty often, especially if people are on the borderline of where they think they want their credit to be in order to be approved. But a lot of times, contacting a lender like Tristan, it would help, because I feel like a lot of times people go out and they're paying off a whole bunch of stuff that may not be necessary, or they're doing things that they believe is gonna really impact their credit, and they're kind of doing it blindly. A lot of times when somebody reach out to Tristan, he could, run whatever he needs to run to kind of see where they are financially. And even if you do get a pre-approval, the pre-approval is not like getting a credit card that, you're basically going to have a bill going forward. Pre-approval just gives you the opportunity to purchase when you are ready. So getting a pre-approval is definitely key. And it's really the first step to actually going out there and start looking. But also, maybe if you were to get a pre-approval and you realize that what you are pre-approved for at that moment may be lower than what it is that you would like, then you could discuss with Tristan, and he could explain to you what is affecting that. And then you guys could work together and figure out what do we need to do going forward in order to get a pre-approval that's sufficient for the purchase that you're looking to make. So.
And Fabian, what I think a lot of times what I'm faced with some borrowers is, they go on and they have the Credit Karmas and things like that they go on to, and they see their scores. Honestly, they're a good gauge to kind of gauge where you are credit wise, but it isn't going to give you a definite, because I've seen scenarios where borrowers come in, they say, hey, my credit score is in the 750s. And then I go ahead and I do a pull, and guess what? They're in the 650s, because for whatever reason, with Credit Karma, it's not really a full detailed credit that they pull. And you have to understand, you might have 3-4 different credit cards, but your 3-4 different credit cards don't report all to all 3 bureaus. You might have one that report to all 3. You might have 2 that will report to only 2, and you might have one that simply just report to one of the credit bureaus. And there's 3 different credit bureaus. There's Equifax, Experian, and TransUnion. Anytime you're doing a mortgage, a mortgage transaction, we have to look at all 3 different credit bureaus. So keep that in mind too. A lot of times the best thing to do is actually come in, meet with a lender, have us do a soft pull on the credit. It won't have a negative effect on your credit. And lately, I prefer to do soft pulls, because the type of environment we're in now, if I pull your credit now, chances are, in a lot of cases, you're not going to find a home within a month or 2. And then all of a sudden, I have to pull your credit again because it has expired or time has passed, where you're shopping for a home and that credit is no longer valid. So the soft pull is always the best option to go with. Once you find a home and you're ready to start you're under contract and you're ready to start the transaction, that's when we'll initiate the hard pull.
So for anybody that's tuning in right now, we have quite a few people. If you have any questions for Tristan, you can go ahead and ask it. But also, I like to take this time also to kind of, if there's anybody out there that's watching right now, that's kind of on the fence about purchasing or kind of hesitant, you could probably share your experience and what is it that kind of make you not feel comfortable making that step. Because like I said, the goal of this seminar is to let people within our community to understand that home ownership is very attainable, right? But a lot of times what we believe is that we have to have a whole lot of money and all the above in order to just make the first step. So I know that that's the perception of many. So for anybody that's out here want to share anything that's kind of like stopping them from moving forward, you can feel free to do so. Otherwise, we'll probably shift it over to Attorney Jorgensen.
Don't be scared, guys. This is a safe space.
Hi, Tristan.
Hello, how are you doing?
I'm pretty good. I have a question for you. You said anybody can come down and basically speak to you to get even a soft pull. Do they have to make an appointment to come see you, or walk-in is okay?
I would prefer an appointment. If you guys want, I'll give you my my phone number. You can write it down, and I'll also give Fabian. Fabian, I think if you don't have some cards, I'll shoot you like a text with just my physical card itself, and then whoever is interested in just having a conversation with me, you could just text them my card, and then they could just just shoot me a text, and we could start the conversation from there. But typically, once we meet, I just have a form just to fill out to do the soft pull, authorizing us to do the soft pull. But I work from home a lot of times since the pandemic, so I'm not, and I cover about 2 or 3 different offices. So walk-in sometimes is not ideal, but if you want to call me, shoot me an email, shoot me a text, then we could always arrange a time for us to meet. And I'm at a couple different branches. We have branches in South Windsor. We have 3 branches in Windsor. We have branches in Granby, branches in Bloomfield, and East Windsor. So, if whichever those locations works best for you and the time works best for you, we can always meet. And again, I'm available even on Saturdays and Sundays if need be, because I do understand that we all don't work on the same schedule. So if weekends are more flexible for anyone, I could also meet on weekends.
Okay, thank you.
You're welcome.
Anybody else? Yeah, Tristan, just a quick recap with the loan types and just probably a brief explanation. So the Chaffa loan, basically 100% finance. Cap on that again. As far as what's the total?
Say that again.
With the Chaffa loan, because now that they're doing the 100% finance again, what's the cap on how much they're gonna typically lending towards purchase and closing costs again?
3.5%.
Okay, all right. And then now you have the FHA that's usually 3.5% down.
Yes.
And like you mentioned earlier, in a competitive market like this, honestly, it's very tough to negotiate closing costs and stuff like that. So some of these grants are perfect if you don't have tons of money saved up, because closing costs could sometimes, in a lot of instances, it could be a lot higher than even your down payment on a FHA loan.
And Fabian, we're realtors now. When they see a pre-qualification letter and it's Chaffa FHA, they prefer to go with a conventional option.
With a conventional, it's tough. Like right now, like I said, it's good for what it's worth, because a lot of times for the FHA and stuff like that, it's probably lower income. Lower credit score. So a lot more people could get qualified for it as opposed to a conventional loan. But in all aspects, the conventional loan would be the better product. And what Tristan and Windsor Federal offers with these grant programs, which are actually conventional products, right? I believe the Equity Builder is $15,000 grant that don't have to be paid back.
Yeah, you don't have to pay it back.
And typically the range for credit score is close to 700 or better.
Yeah. I would say to get the best deal on those, you want to be, maybe like the 670 or higher range.
Yeah, and then the next thing with that too, which we'll just touch upon also, is that it's because it's a grant program like that. I know once the funding is done, the funding is done until next year, because typically the application process starts for that in what month again?
Yeah, it starts in April and then it goes till about September. We have allocated to us about $250,000. So you figure, if we could give each borrower 10 to 15,000, we can do quite a few. We can do quite a few for the term.
Yeah, so in any instant, like, I mean, the average home of, let's say, 250,000, with a loan like that, if you were to get a grant like that, you're in a good spot where more than likely, there's a few more factors that go into your closing costs. Sure, Attorney Jorgensen would probably touch upon that later, but there's a big chance that 15,000 will cover, if not all of your purchase. Then it might cover a majority. And I'm sure for the sake of the grant, it would be nice if we could get some closing concessions on stuff, so that way we're not using probably the whole 15,000. But in this market, it's not really so easy.
Yeah, it's really not. So either way, the grant will help towards the down payment, or it will help with the closing costs. Either way, because it could be used for either. So, if you have a borrower who might say, hey, I have enough for my 5% down, but I'm short my closing costs, we should probably run them about 15,000. Then all of a sudden, hey, this is a perfect option. I have my down payment. This grant will help me with the closing costs.
And also, when you look at the chopper, with the chopper, if you have over a certain amount in your account, then typically they want you to use a portion of it.
Mm-hmm.
So there's so many different products, and like I said, what we aim to do is let everybody know what their options are, because everybody's situation is different. So many different scenarios. So typically, if somebody comes to me, I'll ask these questions, kind of see where they're at. In some instances, I might ask you, generally speaking, if you know what your credit score is. And the reason why we ask these questions is just to kind of know what direction should I point you in, like, so we kind of know the type of products that works better for you, and for what your goal is. So it's kind of in line with what it is that you're doing. So I'm actually gonna check out one more thing that I got with that program that matches the loan, right? Okay. That matches their down payment. I'm sorry. If you were to have, like you explained, if you were to have $10,000, they will match that 10,000. In that situation, some of those funds could roll on to the closing costs, or is that program is strictly set for just your down payment?
No, both programs, the funds can be towards down payment and closing.
Okay, that's perfect. All right. Anybody else have any questions going forward? I know a lot of times, people are just kind of soaking it up, but if you do have a question, this is a good time to ask, because it is a lot of information.
I just have a question regarding the credit inquiry, because I want to know, is the soft check, is that something that we might have to suggest to, let's say, a lender or so forth, for them to do a soft check rather than a hard one? Because I feel like they tend to do a hard check, initially, just right off the bat, do a hard check on your credit rather than the other one. So is that something that we might have to ask them about?
So this is the thing. A lot of lenders will do a hard check. I've been, because of the current environment we're in, I'm not doing hard checks, mainly because I find that borrowers aren't finding homes. Even if I pre-qualify you today, you're not going to find a home. A couple years ago, if I pre-qualify you today, before the week is over, you could be under contract. The type of competitive environment we're in, that's not the case. So, if I do a hard check now, more than likely in a month or two, I'm going to have to do another one, because especially, let's say it takes you 3 months to find a home. That credit hard check that I just did is currently expired. So I would, in any case, have to pull your credit again. So I always try to stay away from especially in these times, doing hard checks. I will only do a soft check currently.
Thank you.
Anybody else have any questions? All right, so if nobody else has any question, I'm gonna now move to Attorney Jorgensen. Attorney Jorgensen, he's a friend of our company. He's a friend of mine. He handles every single closing that I do for myself personally, and yeah, so he'll go into more details about what they do at the Jorgensen Law Firm, and just to kind of give you another insight on the buying process.
All right. Well, thank you very much for that, Fabian, Colleen, both of you. Thank you for hosting this event. I've been practicing law for 20 years. I've practiced the Jorgensen Law Firm. We're on Oak Street. I've done a lot of different things over the years. Real estate has been the main staple of the firm, and it's pretty much exclusively what we do now, assisting people buying and selling homes, leasing, and a lot of investors as well. I'm going to try to consolidate a lot of information into a short period of time. I do want to encourage everybody to set up an opportunity to meet with Tristan. The information is highly technical. I feel like sometimes you need a decoder ring to figure out what they're talking about in the lending world. Don't let that intimidate you. Every house that you drive by has a family living in it, and that family went through the process that you're going to go through. So it's just a matter of making the decision like anything in life. Once you make the decision, just go get it. And you do need people around you to educate you and encourage you. And that's what Fabian and Colleen and Tristan and I are here to do. So I'll start with what people always ask, well, what's the attorney's role in the transaction? The three things that I think my role are to protect you, educate you, and advocate for you. So I think those are the kind of the three things that also agents will do for you as well. And a good loan officer like Tristan will do that as well. So it's really a team effort. While our roles do overlap, everybody does have kind of an area of expertise. For my part, I think protecting the client is the most important thing that I do. So people ask me, well, when should I retain you? That's really up to you. I tell my clients the earlier in the process, the better. I have had clients that retain me even before they're under contract, which allows us to have an initial consultation, review some of the things about their circumstance that might be important to them, and provide some initial guidance. But the vast majority of my clients retain me after they're already under contract. So it does prevent me from offering insight into the contract stage. But the reality is the contracts are very well put together by agents, and agents do a good job with that. And they're boilerplate documents. So a good real estate lawyer is going to be able to get you out of anything in a contract anyway, unless you agree to something that obviously you couldn't satisfy from the beginning. But other than that, most attorneys will be able to help you navigate through that process. So when do you retain? I think as early as possible. And if you're entering into a contract, you definitely want to do so very shortly after you enter into that contract. People always want to know how much it costs. Right now, the current market rate for a traditional transaction is somewhere around the area of $850. It's $850. It's a flat fee. There are multifamily transactions that might have a slightly higher fee, but the base fee is generally around $850. If you find a lawyer that's charging substantially less than that, you're probably going to get what you pay for. If you're going to an attorney who's charging substantially more than that, real estate's probably something that they do infrequently, and therefore they increase the rate. So I think the market rate kind of is what it is, and be prepared to pay for that. It's very important that everybody get a written engagement letter from their client or a fee agreement. There's a lot of referrals that do take place in the real estate world, and that does result in confusion on behalf of clients. So I always encourage everybody, whether they're a client of my firm or just somebody who's in the process, to get a written fee agreement from the attorney. The attorney should articulate in writing what they're going to do for you, and how much it's going to cost, and also, very importantly, what they're not going to do for you. $850 gets you the closing, but is there anything else that's included in that? So I always tell my clients to review the engagement letter I send out carefully. If they have any questions, obviously we go through all that in great detail. But without a fee agreement, the attorney who's representing you might not be representing you. A lot of lenders will refer an attorney to do a closing. the attorney represents the bank and not you. And if something happens, their interests are tied to the lender's interests and not necessarily your interests. So I know that's a very nuanced concept, but I would say make sure you do get a written engagement letter from the attorney that you select for your transaction. Initial consultations are very important as well. I know a lot of lawyers who practice real estate law and they meet their clients for the first time at closing. I have a lot of my clients who are that way as well. Many times people who have purchased a home in the past and, you know, they already know what the process is like, so they don't necessarily need an engagement or consultation rather. But I still think it's important whether you bought one home or 20 homes to have that initial consult. There's always going to be a detail or two that we're going to be able to discuss during that consultation that's going to provide me with additional firepower and tools to represent your interests. The more I know about you and your situation, the easier it's going to be for me to protect and advocate and educate you. The contract is a big part of what we do as lawyers, but it's not something that we generally prepare. In Hartford County and many counties in Connecticut, realtors create the contracts. So I know Fabian indicated earlier that his section of the presentation is not really technical, but in this environment with the competition, you better believe it is. People have little personal letters that they send in with their offers now. There's all kinds of unique strategies that are going into getting a house. So you do have to get the right team in place, and you do have to have an agent who knows the basics of contract law. There's a number of important things in a real estate contract. The two most important, I would say, are the inspection contingency and the mortgage contingency, in that order. So usually within the first 10 to 14 days, there's something called an inspection contingency, which provides the buyer with an opportunity to conduct an inspection of the property and determine whether or not they want the property, or make a request of the seller to make repairs or provide a credit for those repairs. In this environment, a lot of sellers are telling their buyers that the property is as is. So as is means whatever's wrong with it, you're taking it just like that. But don't make the mistake of thinking that as is means that you can't make an evaluation to determine what as is really is. So it still may result in you spending a couple $100s for an inspection and determine that you don't want the house, but that's going to be the best couple $100s that you ever spent. Most agents will put in the contracts that inspections are for informational purposes only, but that information is highly important. If you find out something about the foundation, the roof, or some other material issue, even if you say, hey, I'll take it anyway, the lender may determine on the appraisal stage that they're not going to lend on that property until the foundation or the roof is repaired. Those are material issues associated with the property, and lenders don't have to lend money on a property. It's not a right that you have, it's a privilege. So it's important to get that inspection done. So the first of the two contingencies are the inspection contingency. One thing that people don't really pay attention to, but the Greater Hartford Association Realtors contract does provide sellers with a right to terminate as well. So sometimes an inspection comes in and the seller can back out. It's not used very often because most sellers want to sell. That's why they're called sellers. But I have seen people back out of deals in this environment because of that, because another higher offer came along. So they say, hey, yep, there's a problem with the roof. We're out. We're not fixing it. Contract's over. And that's not a good thing. The second contingency that's important for a buyer is the mortgage contingency. So Tristan talked earlier about all the different mortgage types, but in order to move along in the transaction, once you selected the mortgage type, you need to get a letter from his bank saying that we're going to lend. So the pre-approval is kind of like, yeah, this person's nice, their money looks good, and their credit history is good, but that alone is not enough. They also have to make sure that the property at least appraises at the sale price is a big one. And again, they will look at basic issues with the property, such as whether or not the roof and foundation are in good shape. Once those things have taken place and they've looked at your tax returns, your pay stubs, and everything else that you've ever done in your life or whatever else lenders look at, once they've gone through all that, they're going to give you a letter, and that letter is going to say, yeah, we're making a firm commitment to lend to you. So that's the other contingency. So you can terminate the contract as a buyer if you don't like the condition of the property or if you can't finance it. In this environment, and it's starting to go away, but there were, as I said, waivers of the inspection contingency and even waivers of the mortgage contingency. As a lawyer, I don't really like the waiver of the mortgage contingency, but in an environment where people are desperate to buy houses, as long as you have enough cash to buy the property and you're solid in your income and your credit, and you've already had a discussion with your loan officer, as Tristan indicated earlier, if you know what you need to know from your loan officer, you can take those risks. If you're a borrower who goes along in a transaction, you haven't had an initial consultation with an attorney, you haven't had a preliminary conversation with your loan officer, and you don't have a solid agent, you're going to be in a situation where you're going to make an uninformed decision. And everybody knows where that's going to lead. So definitely do your homework and take the time to set up meetings with the experts in the field. A couple other things about contracts. Was there a question? Okay. So a couple other things about contracts that's important. There are dates in the contracts, and those dates, contrary to most people belief, are not etched in stone. So the inspection and mortgage contingency dates are etched in stone, but one of the dates that's not is your closing date. So in Connecticut, the law provides that everybody has a reasonable amount of time to close. So for you as the buyer, if you're a couple of weeks late, something happened, you're having issues with moving, whatever the case may be, you're not going to be in breach of contract because you close a couple of weeks late. And the same goes for the seller. The seller, if they delay the closing a little bit, is not going to be in breach. A reasonable amount of time in Connecticut is generally up to about 3 to 4 weeks. After you get to the 1 month marker, you're probably going to be in breach at that point. I'm not going to go too far down the road in terms of what happens in the event of a breach, but it's basically who's got the bigger guns and who's going to call the other party's bluff. Because the reality is, even if you are in breach, the only way to adjudicate that dispute is to go to court. And nobody wants to spend several $1,000s going to court to fight over a deposit, if it's a small deposit. So the reality there is that, if there is a dispute, a qualified lawyer who practices real estate law on a regular basis should be able to get you a big chunk of your money back. A more sophisticated real estate lawyer would find ways to tie up the property as leverage to get your money back as well. But again, this is a home buyer seminar, and I want to focus on the buying part. Also, with respect to the contract itself, there is a deposit. And Tristan talked earlier about a down payment, and a lot of people use the term down payment and deposit interchangeably. They're different. A deposit is a necessary component of the contract. So with a real estate contract, if the buyer and seller sign the contract and there's no deposit, the contract is likely not enforceable because there's something lacking called consideration. And the consideration in a contract for real estate is a deposit. So a deposit is just the amount that you put down to secure the contract. That's all it is. So if you're buying a $500,000 house and you put $1 deposit, that would be sufficient. It doesn't matter how much you put down for a deposit, but you do need to have a deposit. A down payment, conversely, is just the amount of money that you're putting down against the purchase price itself. So if you're buying a house for $250,000 and your loan is $240,000, obviously that's a $10,000 down payment. You don't want to put that all down as a deposit if you can avoid it. In this environment, and I'm sure the agents would tell you, but in this environment, a small deposit will hurt you if there's a multi-offer situation, which most houses have. If they see a tiny deposit and they know the deals potentially could fall apart and there's only $1,000 on the table, that's the only thing the sellers would have to grab if you defaulted on the transaction. So ideally, you want to put a smaller deposit down, but the reality is you may have to put a larger one if you want to be competitive in this environment. There also are special terms and conditions that you can provide in the contract. Sometimes with multifamilies, you may make a determination that you want the seller to remove one of the tenants as a condition of closing. If you don't put those provisions in the contract, then your obligation to close will not be contingent on that. So you got to make sure that if it's a multifamily and all the units are occupied, more than likely the mortgage that you're obtaining is going to require that you occupy the property within at least 60 days of closing. So if you don't have a provision in your contract that says, seller to ensure that first floor unit is vacant, then you're going to have to close and you're going to have a problem because one, your lender is going to require that you move in 60 days. And two, you're going to have a tenant that's stuck in there. And in this environment, it's very difficult to evict tenants. Most times it results in you digging deep in your wallet and offering cash for keys. And that's the last thing you want to do if you just close on a property. You're thinking about putting the flat screen up and not paying the tenant off for the keys. So anticipating those problems is very important. And again, it goes down to having a very good team of folks around you who are going to be able to anticipate those issues. But the main thing I think that attorneys do, and we'll help you with walkthrough issues, and I'll talk about that in a few minutes, but the main thing we do is protect you against title issues. Fabian mentioned the term free and clear. What we do as real estate attorneys is we evaluate the title. So the title is the history of that property. You buy a car, they say, show me the Carfax. Well, the title search is essentially the Carfax for a property. It's going to tell you everybody who owned that property since that property was created. It's also going to tell you every lien that was ever attached to that property. Lien could be a mortgage, could be a judgment lien, somebody was sued in court. It's going to tell you if there's any easements on the property. The most common form of easement, for example, would be a utility easement. The property owner has provided maybe the water company with the right to enter the property to provide water or sewer services to the property. So all of those things that are associated with the property come up with the title search. It's important because if we don't do a title search, we can't even guarantee that the person who's signing that contract is the actual owner. And a lot of times there are defects in the chain of title, meaning somebody who's living in a property who closed 10 years ago thinks they own it, but the deed that they have is a defective deed. And if the deed that they have is defective, they can't give you a solid deed. That defect needs to be cured. And that's, as I said, the biggest thing that a real estate attorney is going to do. But it's one of those things that you're probably not going to hear much from with your attorney. Most of the time, people think the attorneys just go through 2 inches of paperwork with you at the closing and that's it. That's really the fun part, to be honest. The most important thing is what we do before then. And what we do before then is make sure that when you leave that closing table, that house is yours and nobody can make a monetary claim against it. One unfortunate reality, though, is that the title is just a bunch of papers that are filed on the land records. I don't have a crystal ball. I have good instincts, but they're not good enough for me to tell you that somebody may have forged a document. I don't know that if somebody passed away in the chain of title that they notified all of the heirs that their loved one passed away, and that loved one, may have had an opportunity to convey the property by will to, one of their children that never found out about it because they were living in California at the time. I mean, there's a lot of different examples. The town clerk could have messed up on the land records. The title searcher could have missed something at the time of the title search. So all of these problems with the title are picked up by something called title insurance. Your lender is going to require that you buy title insurance for them. Title insurance is a special insurance product. And what it does is it ensures that at the time of your transaction, that if there is any of those problems with the title, that you don't have to worry about it. So one of the things that comes up is an unreleased mortgage. So for example, you could buy a house and the seller has a mortgage on the property and for whatever reason, it doesn't get paid. It might not get paid because it wasn't identified the search. Maybe the attorney, didn't send the payoff check on the seller side. There's all kinds of reasons why, but for your purposes as a buyer, all you need to know is title insurance is going to cover that. You're not going to have to worry about being sued by that other by that other mortgage company, because in Connecticut, the debt follows the person. The debt follows the land and not the person. So if there's a mortgage on the property, that mortgage is going to stay with the property even after you buy it. So title insurance is going to eliminate that risk from you. But as I said, your lender is going to require that you buy them a policy anyway. So whether you like it or not, you're going to buy a policy for your lender. An average $250,000 home is going to run you, a little less than $1,000 for title insurance. For an extra $200 or some odd dollars, you can buy your owner's policy. A couple of quick things about owner's title insurance. One, there's no deductible. So whatever claim comes in, you've already paid your premium. As I said, $250 maximum. Number two, they add 5% they add 10% to coverage each year for the first 5 years. So that's pretty significant, and there's no additional cost for that. 3, it covers you as long as you own the property. So if a claim happens 10 years after your closing, the title insurance company is going to cover that loss. And I just want to go back to Tristan talked about mortgage insurance, PMI, private mortgage insurance, or the other forms of mortgage insurance that are out there with FHA loans. Those are all insurance products that you pay for every month. So just like you get a policy with Geico for auto coverage, you're going to pay that every month. Mortgage insurance, you're paying every single month. Title insurance, you're paying one time at closing. So it's a fixed cost. Once you purchased it, it's out of the way. So it's the most important thing, as I said, I think that attorneys do, because if you buy a house for $250 and after the closing, you find out that not only do you owe your mortgage company, $240,000 or $220,000 or whatever the amount is, but you also owe some other mortgage company. If you don't have title coverage and title insurance coverage, you're ultimately probably going to lose that home or have to find a rich uncle or aunt to give you the money to pay it off. And not too many people have Uncle Money bags lying around. So make sure you get title insurance for your transaction. In addition to that, there's other products out there. We'll talk a little bit about that briefly with insurance. People don't think it's required, and it isn't, but I always talk about life insurance. If you're buying a home, it's going to be the biggest investment that you're going to make until you buy another house. So that goes back to what I said earlier about making sure that you educate yourself about all the programs. Listening on a Zoom call for a home buyer workshop is just the starting point. It's one-on-one time that you spend with the professionals. It's going online, doing your own research. If you had a medical issue, you wouldn't just go on a workshop and say, oh yeah, I'm gonna go with this surgery or that surgery, or go to WebMD. You're gonna talk to a physician or maybe multiple physicians before you make a decision. And being that this is your biggest financial decision of your life and probably the building block for building wealth for your family, I would recommend that you put a lot of time into that process. But be that as it may, life insurance is, I think, important. Life insurance at a term policy is fairly inexpensive, and it will ensure that your family can stay in that home. So if you bought a 30-year term policy for a 30-year mortgage, it would be relatively inexpensive and provide you with a lot of peace of mind and so forth. And also disability coverage. There is disability coverages that are available out there that will pay your mortgage in the event of your disability. Going back also to Tristan's presentation, you mentioned the mortgage insurance. I just want to explain what that actually is. Mortgage insurance is just an insurance product that pays the lender in the event that you default. So if you don't pay your mortgage, the mortgage company is not really taking a big risk. They're going to file a claim and they're going to get reimbursed by the mortgage insurance company. So that's what mortgage insurance is. In terms of the closing itself, a couple of things I'll talk about. One, how long does it take? Most closings take about an hour. In this part of the state, the closings are conducted at the buyer's attorney's office. Right now, the closings are generally attended by the borrower, maybe some family members. A lot of agents will attend the closing for a period of time as well. Prior to COVID, everybody would jump in one room and the seller's attorney would be on one side, the buyer's on the other. Everybody's talking over each other. It was a little bit of a madhouse. I think the new COVID protocols of just having the buyer side at the closing work better. The seller overnights their documents to my office in advance of the closing, and then we wire them the funds at the conclusion. So it's a lot easier, and it makes it a little less stressful. If you have questions, it's more of an open environment, a little bit more friendly. Second thing with closings is, I did say before, is a lot of paperwork. There is a lot of paperwork, an inch and a half. Anytime you're talking about paperwork and you're using, measurements, it's not good. But I've been doing this for 20 years. I've done thousands of closings, and a good real estate attorney is going to be able to simplify that. The one document I really focus on is called the closing disclosure. So your lender will provide something called a loan estimate prior to the closing, significantly prior, when your application is deemed complete. And the loan estimate is just that. It's an estimate of all the closing costs and figures that you're going to have. And so you have a preliminary understanding of what it's going to take to close. The closing disclosure is the final settlement statement. So a lot of the stuff that you'll see in the closing disclosure at closing with me will be very, very similar, if not identically the same as what you already received the loan estimate. I spent a lot of time reviewing that because it talks about all the loan terms and conditions. It's going to talk about your interest rate, It's going to talk about the fact that there's no prepayment penalty for most loans. It's going to identify all the components of your mortgage. And also, very importantly, it's going to talk about your closing costs. So those are very important things to understand. Once you understand the financial aspects of the mortgage transaction, I can tell you the whole rest of the package says pay your mortgage on time or else. It's pretty simple. I'm obviously oversimplifying for today. I do go through all the documents in detail, but that's really what your loan package is. It's here's what you're paying, who you're paying, and why you're paying. And then the rest of the documents just say, you're going to pay us, or we have a mortgage on your property and we can foreclose that. One of the things that a lot of people ask about with respect to mortgages, they always say, well, I'll get whatever mortgage I want, and then, I can always refinance later. That's not always the case. So just keep in mind that you may be stuck with that mortgage for an extended period of time, especially now when interest rates are going up because of inflation. I don't say that to deter you from buying, because after 3 years in a house, even if the market declines and the value of your home goes down, you're going to have the same amount of equity you'll have renting. I mean, nothing. So you're still better off. I think 2006, the interest rates were almost 7%. So if I told you now 7%, people would run for the hills. But it is what it is. Everything's relative, and you just got to go out there and get what you want. And the interest rates are what they are. There's a lot of other issues that occur after the closing. We record the deed and the mortgage on the land records to kind of finalize things. But there's a few things I just want to touch base, and then we can open it up for questions. Multifamily properties, that's a preference. Some people can do it, some people can't. It is a great first step into the process, buying, for example, a 3-family. Right now, the 3-family costs are significant. But if you can get into it, it's a great idea. You get into it, you stay there for a few years, and then you throw a tenant in your unit and you go buy something else, and the tenants end up paying not only for the 3-family, but for your other house. So a couple of things to think about with that. The best way to find out what's going on with the house, other than a home inspection, is talk to the tenants. They'll tell you everything that's going on and then some. Number 2, at the time of closing, I'm going to make sure that the security deposits get transferred to you. So if each tenant has paid a 2-month security deposit, call it $1,000 each, and there's 3 tenants or 2 since you're moving in, that's $4,000. In Connecticut, if you don't return the security deposit to the tenant when they move out, assuming there's no deductions for damages or lost rent, they can sue you for what's called double damages. So if you're holding $2,000 or $4,000 of their funds in security deposit, they can sue you and get double that. So at the time of closing, it's my job as a real estate attorney to make sure the seller transfers that security deposit to you. So that's important. 2, you're going to want to make sure that you look at the leases early on in the process. And really, the contract should be contingent on your review of those leases, because that lease could say that the seller, agreed to, paint their unit every 3 months and do all kinds of crazy stuff that you're not going to want to do. So make sure that you get a look at those leases early on. Next topic, foreclosures. Baby will probably talk about that for 2 hours. But foreclosures are just kind of tough. They're bank-owned properties. The banks aren't going to do anything. They're not going to fix anything. They're just going to sell it to you. You could get a good deal on them, but investors are out there and they're really scooping them up. It's really hard to find them in this environment. So I would table that. If you're thinking about buying a foreclosure, feel free to reach out to me. I'm happy to do a one-on-one with you. Short sales, very difficult as well. Not telling you don't do it. I'm just saying that if you don't have gray hairs, you probably will at the end of the process. The banks are not regulated in terms of how they approve them. So one bank could approve a short sale in 6 weeks. The next one could be 6 months. So just if you're not pressed for time and you find a transaction that's a short sale that you absolutely want and you're willing to hang in there, go for it. Otherwise, they are somewhat dangerous. A short sale, just so everybody knows, a short sale is a transaction where the person owes more money on the property than it's worth. Because the home values are going up so much recently, a lot of the homes are not in a short sale status, but it will happen again. So if you're in the market and you hear the term short sale, it means the seller doesn't have enough equity in the property to pay off their mortgage when they sell it, and they're asking the bank to take a short. A lot of times the short sales, there's more than one lender. So just keep that in mind as well, that not only do you got to get the consent of the primary lender, but also the other lenders who are entitled. Use and occupancy agreements. I hate them. I'll be candid about that. A use and occupancy agreement is an agreement between the buyer and seller where, in the buyer's case, if they're letting the seller stay in the property after the closing for a period of time, it's called, a seller occupancy agreement. And what happens is you do your closing and then the seller maybe can't move out for a week. So you allow them to stay in the property for a week. You charge them a fee, plus you take a little bit of money in security in case they don't move out. I don't like them because if they don't move out, it's really difficult to get that tenant and that cost could be significant. Quoted by your lender, recommend it. It's always better off to wait. Surveys. Connecticut's not a survey state. There is survey coverage available on the title insurance policy. Surveys in other parts of the country are required. They are still a good idea to do them. I use a gentleman by the name of Ozzie Blint. He does all of my surveys. It's always nice to know where the property line is. If you're going to put up a fence, or even if you just want to know where your property ends. The maps from the town are great, but there's no way to correlate a map with the reality without a pin in the ground. So that's another thing to think about. You don't have to do it before the closing, but it's always a good idea to get one. Zoning and permit violations is another thing that I've seen a lot recently. Not so much the zoning, but more permits. A lot of people do work on their property without pulling permits, and that could be a problem for you because the town will always have the right to access that property and enforce the building code. So if you buy a house and the seller did work and they didn't pull the proper permits, the town could come out to you later and say, hey, tear down that wall, show us the electrical, plumbing. And if the work is not done appropriately, you'll have to cure it. And curing it means going in your pocket. So that's one of the things that does come up in closings. And that's another thing that a good agent would be aware of early on and work in conjunction with my office or whatever attorney is involved in the transaction to avoid those problems. Lead paint, again, depending on the year the property is built, 1978 is a threshold. It's always good to watch out for lead paint. Some of the lending programs are very stringent about that, and loose paint will have to be repaired. Some sellers say they won't do it. So there are situations where you as a buyer might have to sign an agreement. You go in there, paint over loose stripping paint or scrape it down just to get your loan through. And then underground oil tanks, that does come up on occasion. It's always you want to make sure that there aren't any, and if there are some, that they've been remediated and taken care of appropriately. One other thing that does come up, and this kind of overlaps with what the agents do, is a final walkthrough. So it's very important to conduct a final walkthrough before the closing. You want to do so to make sure that the property is still in the same condition it was in at the time of the original contract. And if it's not, you want to let me know right from the property or have your agent call me so that I can start to work on a solution with the seller side. The solution could be fixing it. The solution could be putting money aside at the time of closing from the seller's funds to make sure that they fix it, called an escrow agreement, or the solution could be delaying the closing. Again, a qualified real estate attorney is going to know how to handle that situation and so forth. So make sure you do that. And the last thing I would encourage everybody to do is just where we started, is just to make sure that you put as much effort into you buying a house as would be required. I mean, if you think about the size of the investment, if it's a $250,000 deal, that's $250,000. Don't minimize that at all. Put the time in that's necessary. One small mistake in a real estate transaction could cost you thousands and thousands of dollars in the short run or over the course of time. The programs that Windsor Federal has through Tristan, not all lenders have it. Every lender does have a different type of program. Everybody has a product, but it's all about accessibility and whether or not the loan officer is speaking your language. Some of the banks out there, they charge more, they advertise, they do all these other things that you'd think that they're on your team and they have the same goal that you do, but a lot of these lenders don't care. They charge more because they can. So just be on the lookout for that in the environment that you're in. Again, it's my pleasure to be here tonight. I'm happy to answer any questions. I know it's getting late. I condensed a long workshop into a short window of time. So I'm glad everybody's still awake, even though I did see a couple of yawns. So any questions?
All right, so if nobody has any questions, like what we were mentioning earlier, I know we kind of jumped into the seminar, just trying to make the time. Like Attorney Jorgensen mentioned, like for us as agents, which I didn't even go so deep into that. We're a smaller brokerage in East Sarford. I think right now we're a team of 8 or 9. So definitely we take every deal personally, and we are from the community, so we take exceptional pride in that. But we do spend a lot
You
of time.
have bad reception.
Clipping out? Is it better now, or is it any better or no?
It's good on my end. Is anybody else having trouble?
Anybody else? Am I clipping out for anybody else?
No, it's fine over here.
Okay. All right. Yeah, so for us here, as agents, we do spend the majority of the time with the clients. The other pieces is a little bit more brief, and everybody play an intricate role. But for us, like, you know, especially in a competitive market, like Attorney Jorgensen said, you see the craziest thing coming across on contracts now, because everybody's trying to make the offer a little bit more attractive, right? But for us, what we try to do is, like I said, we have to put the buyers first at all costs. Like, so certain things we would not necessarily advise. Unless you were a contractor and you've built houses and you've done all of that stuff, I would never advise for somebody to waive an inspection. Us as agents, we're probably in there with you maximum amount of time. I'm probably on a showing, it's probably 30 minutes. An inspector is there for 2 hours, right? They're going into crawl spaces, whether there's attic, basements, they're pulling off electric panels. They're doing a lot more than what we're doing in that 30-minute span. Myself and every agent here, we do a lot of training on property conditions, but we are not inspectors, right? And the reason why we do that is because, like I said, we're the first line that you go through, where basically our goal is to make sure that you don't have to, we don't wait until you get to an inspection to see something that we probably should have seen from the start, and therefore we run into a major issue. And like Attorney Jorgensen said earlier, when we talking about inspection contingency, like I said, you have a lot of people that's waiving inspection, which we try not to do. Sometimes we might do a shorter time period, but it's usually based on, you know, because we have inspectors that we work with also. So if we do a 7-day inspection contingency period, it's really because we know that the inspectors are typically available, so we could get the inspection done. If there's any issue, we could reach out to the other side, see if we could come to some type of agreement, whether it's for them to fix it or credit any type of funds at closing to make up for that. So, like I said, for us as agents, it's important for our clients to trust what we do. Just trust us as the professionals, because this is what we do every day. Especially in the beginning of this, when we saw prices jumping significantly. I think for a lot of people, it was shocking if a house was listed, for example, let's say 220,000, and your agent would say, hey, listen, I know this house is listed a little bit on the market. The market is very competitive right now. We should offer 250,000, right? If you don't trust that agent, because I think some people have this perception that somebody's trying to get over them, or maybe it's a trust that people have, or the lack of trust, I should say. But just understand that if we do advise that, it's because this is what we do every day. It's not because we're trying to make any more money or anything like that. That's certainly not in the forefront of our minds. But when we're going to take the time to put in an offer, you have to trust that we've done our due diligence, and we're trying to put our best foot forward. Likewise, if you were to meet with myself or any agent here at the brokerage about purchasing a property, the discussions that we'll have may include what your goals are, right? Because a lot of times people believe that, you know, they're renting right now and they believe they can't afford to buy. But a lot of times I tell people, I could not afford to rent because what the rents are right now is oftentimes higher than what the average person is paying for a mortgage, right? And like Attorney Jorgensen said earlier, like, you may actually become an investor and a homeowner at the same time with these same programs. So let's say in some instances, I might have some clients that may be older. They're getting closer to the age of retirement. And sometimes they're very young and they're just thinking 10 steps ahead. They might come to me and say, hey, I really don't, you know, I'm getting older. I cannot keep working so much, right? But I want to buy a home. And the discussion might end up being that, you know, are you okay with buying a 3-family, right? And if they agree to it, then it might be perfect, because when we go ahead and look at what the projected rents are, what the house is selling for, a projected mortgage, in a lot of those instances, that individual, if they're occupying that property, they're then living for free, right? That's one, probably most people biggest expense for the month is probably their housing, whether it's a mortgage or rent. So going that route, that individual might take that strain off of themselves, right? Because now they have 2 people that's actually contributing to that mortgage. And in some instances, they might actually end up with additional funds in their pocket. For the person that's even thinking ahead, that might be their first step. And then maybe a year or 2 later, they might move out of that property. And when they move out of that property, now their unit then become an income generating unit, and then they can move on to something else. So that's the reason why when you do meet with us, these are things that we discuss because we want to be on the same page. Once we're on the same page, there's no doubt that we could achieve whatever goal it is that you have. But that communication is very important. Like I said, it's a lot of times that you're spending with your agent. So the relationship has to be there. You have to be able to deal with us on that basis where, you know, you're comfortable, we're comfortable. And that's really just what our motto is here. So before we even wrap it up, like I said, if anybody has any additional questions, I'm probably gonna have Colleen add our contacts in here. So if anybody want to reach out, you could always check us out on our website, prefectrealty.com. You could learn a little bit more about the company. You could also, like I said, she might just leave these in the comments here. There we go. And you could reach us by telephone. You could call the office. Somebody will be able to direct your call to whatever agent it is that you're looking for. But if you have any other questions, we would love to answer your questions while we're here on this Zoom.
Well, Attorney Jorgensen suggested that we get an attorney as early as possible instead of waiting until perhaps closer to the closing time and so forth. And he mentioned some of the rates. So can we also have his contact information as well as Tristan?
Yes. And if Tristan contact was not added, I don't know if Tristan is still on or if he had to go, but if he is, he could probably either just tell you his cell phone number. Anybody want to add that also?
I am still here. The best number to reach me would be my cell phone. That number is 860-280-4967. 860-280-4967. And my email address would be tcrosdale, TCROSDALE @windsorfederal.com.
Yes. Anybody else have any questions? In regards to even getting an attorney, like Attorney Jorgensen says, a lot of times what we do is it's in some instances it may be before, and that's always advised, especially if you're ready to buy. But in some cases where you may not have an attorney, usually as soon as we're writing contracts and we're going on the contract, we would then reach out. Typically, I usually ask people, do you already have an attorney? In most cases, they don't. I usually refer them to Attorney Jorgensen and send all the contracts, all the necessary documents. Likewise, we're sending that to Tristan, so that way they could start the loan process. And every loan type and for what it is, they typically have a certain like different time periods before they close. But usually, typically, you're looking at anywhere between 30 and 45 days. And in that, a lot of times the communication might not always be back and forth in regards to like maybe from the attorneys or the lenders, but I trust that they are working in the background, putting the pieces together to get you to that closing table. So if everybody got the contacts, anybody, because I know there's quite a few people on, so like I said, if you have any questions, feel free to. We do have a few more minutes. It doesn't really matter if we go over time, but we do want to answer everyone's question.
Yeah, for my part too, as well. I mean, you could just call the office and set up a consultation. Just say you participated in the workshop tonight, and I'll be happy to go through things in greater detail. Been doing this 20 years. I still love what I do, so it's all good. Just give me a call. At the end of the day, my mission is to provide folks in my community with the best information and the best opportunities. Simple as that. Last year, I learned after 20 years of practicing real estate law that Black America has, like 1 trillion worth of real estate wealth, and white America has 26 some odd trillion dollars. So I'm going to keep it real and tell you that part of the reason why I go to work every day is to change those numbers. So as I said, I love what I do and I'm passionate what I do. So just give me a call, set it up. And my office, one thing I didn't mention during my presentation was we do have real estate paralegals who do a phenomenal job assisting us. So it's just like going to a doctor has a nurse, attorneys have paralegals, and they just do a great job. The paralegals on my team combined experience, right, almost 100 years, and some great folks as well. And they're going to help you guide you through the process. If I'm not available, most of the questions can be answered by them as well. So we do operate as a team. I'm blessed to have, I think on my team, there's 7 of us at this point. So we do work as a team to make sure we get everybody across the finish line. So I know it's getting late. So as I said, feel free to reach out and just set up a consult. I'm happy to answer any questions one-on-one.
Yeah, and one more thing before we go. And I know Attorney Jorgensen mentioned earlier, about people with looking for foreclosures and stuff like that. That's oftentimes a question that we get. There is a handful of foreclosures that we get that usually come on the MLS. So yes, we do. When once it's listed, most of the time, like I said, we're showing it anyways. But also what he was mentioning to was the foreclosures that's outside of the MLS. The stuff that like the auctions and stuff like that. Just so anybody out there know, that's something that we do have experience in. We are a team of investors too. I believe probably half the team are active investors, whether it's buying and holding properties, doing rehab and flips. And we also do have a network of contractors and everybody that makes that process a lot easier. So if that is something that you're interested in also, and you just truly want to be an investor, because like Attorney Jorgensen said, a lot of times we're underrepresented, right? So that is a big thing for us. So we share information all the time because we do want to basically add more to each of our toolbox, right? So when we go to a lot of these auctions, there's not a lot of, minorities or even Black Americans or just Black people in general. So we understand that it's definitely a lopsided uphill battle with a lot of these things. But we're looking to change that over the course of the next couple of years by doing seminars like these, investment seminars, and so on and so forth. Because like I mentioned earlier, it comes down to people just having the knowledge of what's available to them. The more you know about these things, the less it seems impossible. A couple of years ago, like this, whatever we had as a goal, like even for myself, it was just a thought, right? But then the action made all of that change. And now we're doing a lot more now because we seek the knowledge in order to achieve those goals. So I just want to thank everybody for tuning in today. I want to thank Colleen for putting this together. This is something that I truly believe is important within our community. And I am truly grateful that you reached out to us in order to provide that. And I want to thank Attorney Jorgensen for coming through. And I want to really thank Tristan also for coming through and providing information. I know you guys are really busy, and I just appreciate you guys taking the time for a common cause. So thank everybody for coming in.
Very
and
welcome, Fabian. Thank you. This
hopefully
was
you
a
guys
good book.
are here for the next one.
Thank
All right.
you.
Take care, guys.
Thank you very much.
Bye-bye.
Appreciate
Bye.
it.
Thanks.
Thank you.
Before we go, if any West Middle families are on, I'm gonna put your names in the raffle tomorrow morning. It'll be on Parent Square. Thank you so much for coming. And your names will be for a $20 a Stop and Shop gift card. Have a great night.
Thank you.